Good afternoon. My name's Larry Ray. I'm the President and CEO of American Manganese Inc. I'm here to tell you today that American Manganese could possibly bring in the lowest cost electrolytic manganese metal mine in North America. It'll be the first one in the past few decades. What is manganese? Well, you can't have a steel industry without manganese. If you don't have manganese, you don't have steel. If you don't have steel, the world stops. North America has no manganese. We depend on our neighbors and other countries to import our manganese, and it just doesn't make any sense we don't exploit the resources in our own country. So I'm here to tell you that we are moving ahead with the feasibility study, we're moving ahead with the environmental studies, and we're moving ahead with a massive drill program in order to build the American Manganese Inc. into the first primary electrolytic manganese producer in the United States. Please visit our website at americanmanganese-inc.com or call us at 604-531-9639. Thank you.
Welcome back to the Money and Wealth Show. I'm Sterling Fox. Our special guest this week is portfolio manager, former lawyer, and author Danielle Park from Venable Park Investments in Southern Ontario. Danielle, you talked about the debt crisis before we went to our break, and I think that this is something we need to return to and elaborate on a little bit, because I don't know if enough Canadians have a strong enough sense of exactly how in hoc the entire world is right now, including Canada. We're just less in hoc than most other people, so we're a little smug about it. Talk to us a little bit about the debt crisis.
Yeah, well, you know, what happened was we had the credit bubble, which was fueled by credit derivatives levering off of overpriced real estate.
Sure.
And that went on for a few years to a big peak, as we know. And the U.S. burst first. So the whole unraveling of the credit bubble is sort of further along in the United States than it is in any other country, really. And at first there was an assumption that that's because the United States was sort of unique in its problem. And now there's a realization that no, in fact, you know, deficit spending has been sort of at really record levels in the UK, in the United States. And what they've done is they've tried to stimulate domestic demand by pumping in all this government debt. So
right.
you had consumers over-levered, banks starting to crumble under the weight of them starting to default, governments trying to rescue banks. Now you got governments trying to rescue governments. The reality is we've got something like 220 trillion bucks of debt in the world today, which is 360 times world GDP, 360% of world GDP. If you think of the world as a country, you realize that that's an awful lot of leverage and multiples of what we had even 5 years ago. So it takes a while now for the ramifications of that. It's a balloon on the back of global growth, because there's capital being spent on payments now. As interest rates even just step up a little bit, it pulls more and more out of your revenue at a time when tax revenues are already weak and falling.
Right.
So it's really a difficult thing to grow your way out of at this point. So everyone's really trying to struggle with how to control spending and keep the economy stimulated somewhat. Because if you look at, it's interesting, if you back out even the US stimulus spending, you see that we have the weakest recovery that we've really ever had coming out of a major recession in the last 50 years.
Right.
So we're not talking about stellar growth in the real economy. Small business still aren't hiring. You know, it's been the government trying to do the heavy lifting. And now the question is, as we go into Q3, to what extent have they lit this bushfire under the economy? And I think the jury's really out on that. I don't see a lot of evidence that it's really taken, and that, you know, we're going to see job growth soon and that sort of thing. So I think Q3 could be, you know, flat to even negative for GDP growth. And I don't know, the equity markets are grappling with that right now.
I want to come back to what you do best, or what I think you do best, which is counseling individuals on survival strategies during these extremely bizarre financial times. But you did mention the G20 gathering in Asia a few days ago in advance of the official leaders G20 in your neck of the woods in southern Ontario later this month. The bank tax has turned out to be a bit of a sticky wicket for the G20. Canada doesn't want it, and the Prime Minister says, we didn't have to bail out any banks. Why should we impose bank taxes to create a slush fund for potential future bailouts when we've never had to deal with that? Most of the rest of the G20 is, Danielle, in the situation where they need to create a slush fund because I don't think they're very confident that they're not going to have to bail out their banks somewhere down the road again.
Well, it's interesting. I'm kind of two minds. I understand the rationale for why they want this sort of a slush fund for banks to try and self-insure against this kind of disasters going forward. But I think the more important thing is the controlling of the leverage. So why didn't Canadian banks blow up? Because we did not have the extent of leverage in our system. That's been the saving principle in that sense. We do have a lot of leverage in the consumer sector, which I'm still worried about. But as far as the government goes, we had, as far as the banking system goes, we had less leverage, and that was a good thing. I think we need to go back to things like the Volcker rule, like a Glass-Steagall, like divisions, bigger Chinese walls, and more restriction on leverage. It should never get to 20, 30 times, levered within the system. It's like driving at 1,000 miles an hour all the time. Accidents are going to happen. If you're going at that speed, they're going to be catastrophic accidents, So the only thing regulators really can do, I think, is control that one aspect of humanity that always wants to become more and more aggressive.
And one of the control tools that they have at their disposal is ensuring that banks have more cash on hand, because we certainly saw in the United States and in Europe, banks lending out money they literally didn't have. And so there is some attempt being made in the States these days to increase the amount of standby cash that banks have, and they can only lend out a certain fixed percentage above that, again limiting the opportunity for disaster.
Absolutely. Capital reserve ratios, recoupling the idea of money back with a finite supply. That's a theme that we need to work on. It's interesting, if you want cash today from your bank, I happened to need some last week, and it was more than $1,000. And so I called ahead to my bank because I'd remembered sometime before that they said, you can't just walk in and ask for money. And it really makes,
imagine the nerve, huh?
It really makes the point. If you want more than $1,000 cash, you're supposed to call and give your bank warning, because they don't keep a lot of liquid money on site. And you realize you get into this kind of a crisis feel where people start wanting to actually see their money in their hand. It presents a problem when you have a very levered system, because the truth of the matter is they don't have $1 for every dollar that they have an entry for.
Exactly.
And that is a concern. It's a concern for the world. It's a concern for the banking system. And this part of humanity, this human behavior, is never going to go away. So we just have to accept this is what we're like. And the best thing we can do is control the speed with which money can move around.
You're watching the Money and Wealth Show. I'm Sterling Fox in conversation with Danielle Park, and there is more to come, including what to do, how to survive this bizarre financial situation so many people are struggling with. We'll be right back with lots more.
Good afternoon. My name is Larry Ray. I'm the president and CEO of Gold Ray Resources Corp., a company that trades on the TSX Venture Exchange and has the majority of its operations in China. We are currently developing a resource there with limited production at this time. Our goal is to increase this production up to about 1,200 to 1,500 tons per day. And to do that, we are negotiating with several Chinese companies, one of which will become our partner either directly into the company or into the project, which will allow us to move the project up to the desired tonnage. For further information, please visit our website at goldray.com or phone 604-531-9639.